this is a market that is commoditized. This is really what I would call like the subledger market, where you have nearly as many software providers as you have like buyers. And here you need, as a buyer, you need to go for the cheapest option, given that they have like all these providers that are going to them. At the end of the day, they manage to get what they want at crazy prices sometimes. When you get to a certain level of complexity, it's not just like the accountants that want to push data to zero, but it's the accountants, it's the people in the operations team that want to do reconciliation upstream, it's the compliance team that wants to automate compliance reporting, it's like the risk management team that wants all this stuff for the risk management. When you get into that level of complexity, you know, like just representing that structure and that complexity on the pricing page and say, hey, you just can click on things and it gives you a price, it's just not possible. So, because then you need really to adapt to the reality of all these companies.
Welcome to the Accountant Quits podcast, where we help accounting and finance professionals learn how to manage a business using crypto. Today's topic is on building an enterprise crypto accounting software. Crypto subledgers have evolved from their early days where they would only be required to categorize on-chain transactions and calculate the realized gain or loss under the appropriate cost basis method. As the crypto industry matures, so do the demands on financial reporting. To satisfy the existing customers and bring new players into the industry, subledgers have to adapt to new requirements from local GAAP and IFRS, regional regulatory requirements like MiCA in Europe or VARA in the UAE. Finding a subledger that only provides crypto bookkeeping features is no longer sufficient. You need one that addresses regulatory and audit readiness. One company positioned to support institutional mass adoption of crypto under this vision is Cryptio. For over 6 years, Cryptio has powered the crypto back office of more than 400 organizations, including industry heavyweights like Circle, Uniswap, Consensus, Gemini, Paxos, 1inch, and even the government of El Salvador. And today I'm pleased to have Antoine Scalia, the CEO and founder of Cryptio, to share how they're building their platform's third generation to meet regulatory, audit, and accounting requirements. In this episode, Antoine will share how the new Cryptio Bedrock product is being built in line with global macroeconomic shifts, how their alliance with KPMG ensures they have the right expertise, and the common struggles new teams face when first adopting crypto. Lastly, if you're new to this channel, I'd really appreciate your support to help us grow by liking this video and subscribing to our channel. Now enjoy my conversation with Antoine. Antoine, welcome back and thanks for taking the time to be here.
Hi, Omar. Thank you for the second invite. Great to be back.
So for the listeners, Antoine is a returning guest. He first joined us on episode 26 back on Feb 19, 2022. Back then, Cryptio was still in their first generation stage. A lot has changed since, and in late 2024, Cryptio launched their third generation platform, Cryptio Bedrock, that will go in more details later. And earlier this year, Cryptio announced a Series A extension raise. So with all these developments, I knew it was the perfect time to bring Antoine back. And since we already covered a lot of the fundamentals of crypto and their subledger features in our first conversation, today's discussion will be a bit different, focusing on their product's new changes and basically what's next for Cryptio. So I want to start with the Series A raise. In 2021, Cryptio raised a seed round. In 2022, they did a Series A round. And earlier this year, like I mentioned, they did a Series A extension round. Now, in crypto, there's a big fundraising impact on price cycles. And I'd say you time your fundraising right during a bull cycle. I want to ask you, given the evolution of the crypto back office industry, and with so many other new subledger products on the market, how has the investor conversation shifted from your first raise back in 2021 to today?
So in 2021, when we started, like the market was very, very early. We were when actually we started before that because, as you said, we started like 6 years ago. But the market was very early. We had very few competitors, and we were very small, basically working with small crypto startups at the time, but starting to have a bit of traction, but still very early traction. And so the way investors thought about the investment was basically a bet on, obviously a bet on us and bet on me and bet on the team, but most likely like a bet on the market and a bet on corporate adoption of crypto as a whole. And now, like in 2024, 2025, so 3 or 4 years later, obviously a lot of things happen in the market, and it happen for us as well. And here it's not just like an investment in the market, it's an investment in the sort of like the growing leader in the industry. In the last 3 years, the market has evolved, and we've shown our ability to kind of be the early dominant player in the market, especially in the enterprise world, by closing a lot of. You've mentioned some of the customers, working with some of the biggest players out there, and have global alliance with KPMG. Like, we've done really amazing things in the last few years. And so the way investors now are looking at the investment is betting on the category leader of a category in a market that they believe could be very big. And so the way they're seeing the investment is a bit different now.
So, what would you say are some of the macroeconomic shifts that have happened since that your investors are aligned with, and they're confident in the next 2 to 3 years in terms of crypto adoption? Like, we could reach a certain maturity stage, let's say, with crypto.
Yeah, so obviously, like, everyone is very excited about all the regulatory changes that have been happening in Europe for quite a while now, and that are happening in the US currently, and that will happen this year. And so, yeah, everyone are excited about this, and we believe that it will, and it is already like benefiting the company quite heavily. And so we're very excited about that. But essentially, one of the other things I think that we did very well in the last few years is to demonstrate our ability to grow our market without relying on new entrants, in a sense that these banks that now are allowed to build crypto products and distribute crypto products in the US, they won't release these products, and they won't go to market tomorrow. And the startup world, so the timeline is different in startup land, right? Like, we don't have time to wait for them to grow and to grow revenue very significantly and very quickly. So what we've done, and what we've done very well, is to kind of extend the scope of what we're doing and move from like a core accounting subledger platform to like a suite of products, like a data platform that goes just beyond the core accounting stuff. So we're going to talk about Bedrock later, but it's moving from this like subledger positioning and subledger reality to being a data platform for accounting operations compliance. And I think this is the investors are excited about the market, but they are way more excited about this and our ability to kind of increase the size of the pie without relying too much on new entrants. But new entrants will come. I'm very confident about that, and that will have a massive impact on the business. And in the meantime, we want to design and lead a category that is as big as possible.
Now, a topic that I don't often touch on this podcast is culture, like company culture. We mostly speak about the accounting, the technical stuff, but because you're a returning guest, Antoine, I also wanted to speak about how you've been able to create the right company culture at Crypto. Speaking from an outsider's perspective, I would say that Crypto, the way I see it, it stands out as a premium and elegant brand. A brand is not just a logo, a brand is a promise. It's a story that you're selling to customers, and it kind of tells the customer what to expect when they're going to be engaging with you. So when I look at Crypto's various brand touch points, including your platform, of course, but also things like your social media presence, your strategic partnerships, the annual Crypto Finance Forum that you organize now for the past 2 years, I'd say that you've created a culture not only about the product's functionality, but you're also consistent on your brand's elegance. I know it's not coincidental, and I want to ask you, how much is branding important to you as a CEO, and how do you ensure this vision carries through across all the touch points with your team?
Yeah, great question. And thank you for Thank you for the compliment. Yeah, indeed, it's on purpose. The brand is obviously something that is very, very, very important, and especially in our market, right? Like we are in a very early market where essentially what we are doing is we're selling trust, right? Like we want to position ourselves to like the people that we are working with into the industry as the trusted partner to solve their most complex data challenges and kind of the best experts out there. And so this is who we want to be. And then your brands, the way I'm seeing this like branding thing is like the brand should resonate with you, who you are, how you behave, and also like who you want to be. And so I think who we are, it's we have like a very strong culture in the company, and we have the reason why we've been leading the way is really it's not because we have like incredible vision on how the future should look like, is because we have an amazing team and very consistent in terms of personality, in terms of attitude, in terms of what they bring to the business. We are like a team of very passionate people, smart, extremely committed to build this like super big business. And yeah, we also are a team of people, I think, with like, very serious people, which kind of doesn't mean anything, but like very high level of integrity in a sense that it's not just a thing about being very ambitious, but it's being conscious about like what's the way and what are the things that you need to do to be successful. And what is very clear in our business, and I think it's true in every business, but especially in our business related to data, back office, accounting, and so on, is like you need to behave and operate with like high level of integrity. And so kind of how we behave, yeah, we care deeply about the companies that we are working with. When we close a new customer, we work like relentlessly so that we become that trusted partner to them, and then that we can grow with them. Because the market is so early that if you don't build these type of relationships with people, and like you don't know where to go because these are the guys that you're going to build with, right? And so I think that the brand is a representation of all of these things, is the representation of who we are as people, like how we behave, and also like, yeah, who we want to be. And so, yeah, this is very intentional, and I'm glad that people can see it.
Yeah, I mean, if you hire people who like beautiful things, so they're going to be building like a beautiful product. So that's a good segue onto the next topic, which I want to touch on, which is about hiring. So at Cryptio, you have a hybrid work approach, and I want to ask you about your experience on hiring. So when you're hiring in general, as an entrepreneur now, I also have to hire people. So you have two kinds of people: those with a mindset of creating more value that they can capture, and those who are a little bit more transactional. They're trying to capture all the value for themselves. So I'm seeing that Crypto is hiring a lot right now. And given your product success, I want to ask you, what patterns have you noticed in a successful talent that you ended up selecting, and what learnings you have from, let's say, someone who turned out to be a bit deceptive,
Yeah,
if that's
absolutely.
not too harsh, the word.
No, no, no. So yeah, I think again, one of the reasons why we've been doing well is the quality of the people, and there is definitely a pattern on type of people that works well with us and that can grow and have like a very strong impact in time. I think I'm not exactly sure, but what is the actual like metric? But we barely have like zero churn in our team. Like no one is leaving. We have a team of nearly like 90 people. So there's something that works on how we do hiring for sure. I would say that the traits that work well is high level of autonomy and curiosity, in a sense that a lot of the problems that we are solving on the product side, on the tech side, on the like organizational side, the these are like these are very complex, and the we hiring people that can navigate that complexity kind of on their own, and also bring like an element of curiosity in how they're doing things. And so it could be an engineer that we are hiring that develop like an amazing curiosity and passion for like the very complex like data management systems that we are building, and can bring that passion and that intensity to the team. It could be people that we bring in a customer team that have usually deep passion and interest for crypto and for like these new use cases of companies that we're working with. And so you need to have this like extra energy that usually is comes from like curiosity for what you're doing. And then the last thing is coming back to what I was saying earlier is, and I'm insisting on this because it's very important, it's the high level of integrity, in a sense that we are looking for people that want to do things well and that want to do things by the books, because essentially this is maybe by taking shortcuts, by being aggressive, by overselling, you can get somewhere, but then at some point you will pay the price for it. And we don't behave like this, and we don't want our people to behave like this. So these are the other personality traits.
And because so at Cryptio you've adopted a hybrid approach, would you be against the fully remote kind of work approach?
So we have a remote first company, in a sense that no one in the company has to go to the office ever. But we have office spaces. We have one in Paris, we have one in London, and very shortly, very soon, we're going to have one in New York as well. And so we're building these hubs. And so the thing is more like, how can you implement initiatives and create a sort of life around that office space, so that people comes, and they can come to work, or they can come to events that you're organizing in these hubs. So if I'm seeing these like sort of like remote first culture. I don't really believe of, if it was like fully remote with no office and no one meeting each other like ever. I don't really believe in that model. There's some companies that manage to do it, but I don't really believe in that model, especially in the environment that we are in. But the model that we have, which is remote first, but then there's like loads of reasons for people to come to the office, I think works very well, especially with the type of people that I described, where you have like autonomous people that you can trust. You can let them operate and work from where they want, but seeing their colleagues from time to time is actually very important.
Yeah, I completely agree. Now, for the listeners, the remaining part of this episode today now will be focused more on Cryptio, the product. And the first topic I want to touch on is about pricing. So, because I interact with people of the industry and sometimes I hear their feedback. So, one of the common criticism that I hear is about subledgers' lack of transparent pricing. It's not just directed at Cryptio. Many of your competitors follow a similar approach. In the past, I remember you had this transaction-based pricing slider that you could basically, it would help you to determine your monthly cost of using Cryptio. I saw that's no longer in place. So for
Yeah.
prospective customers who find pricing unclear or they don't really know how much it's going to cost, how do you respond to that pricing question? And yeah, how does Cryptio basically structure their pricing for customers today?
So I understand that criticism on the fact that pricing is not transparent. It's not something that is only like that touch only our market. Is something true in the SaaS market in general. And I also understand the price sensitivity to some buyers out there, especially the very early stage, and the companies with like very simple use cases. I think here, like, it's really, when it comes to crypto, like, it's very important we really differentiate two things. As I just said, like the very early stage, very simple, low transaction use cases, where, to me, like, this is a market that is commoditized. There's like a lot of players this is really what I would call like the subledger market, where you have like a lot of companies. You have nearly as many companies like software providers as you have like buyers. And it's very commoditized. And here as a buyer, you need to go for the cheapest option. And even if pricing are not transparent, eventually what buyers do is that given that they have like all these providers that are going to them, they play the providers against them, and at the end of the day, they manage to get what they want at crazy prices sometimes. So we've seen this, we've seen that. Sometimes were part like long time ago of that game. We really don't do that anymore, and because we like we're focusing more on like the more complex like data challenges and the more complex use cases, and so we're moving kind of away. And when you're moving away, and I think that price is obviously an important factor. At the end, the buyer, like, he solves a problem, and the problem has kind of a value, and he needs to put a price to that value. And this is not infinite. Like it's not infinite. But when you get to a certain level of complexity in terms of like types of problems, in terms of who it touches, it's not just like the accountants that want to push data to zero, but it's the accountants, it's the people in the operations team that want to do reconciliation upstream, it's the compliance team that wants to automate compliance reporting, it's like the risk management team that wants all this stuff for the risk management. When you get into that level of complexity, like just representing that structure and that complexity on the pricing page and say, hey, you just can click on things and it gives you a price, it's just not possible. So because then you need really to adapt to the reality of all these companies. And so where you go a bit up market and you go into that world, the transparency is, it's not really a bug, and it's not really because we want to high prices. It's just that every situation is kind of different, and so it's very difficult to represent something. But high level, obviously there is a structure, there is like a sort of like mechanism through which the pricing works, which is based on two main things. Is based on the modules that you are building. So today Cryptio, as I mentioned, is a data platform that will connect to basically all the different data points and data sources that you have in your company, which could be like crypto exchanges and wallets and custodians, but could be also like internal system. It could be OMS and PMS systems. It could be even like data analytics systems or whatever. Like you will pull all that data, and then you will like you'll have like sort of a unique system of records. And on top of that, you have module that can automate stuff, that can automate workflows, accounting, push data to your ERP system, reconciliation, compliance, risk management. And so the more module you take, the more expensive you pay. And then there is like a transaction element of based on the number of transactions that we have to process, like the price moves basically. But yeah, it's given the complexity of the use cases, and it's difficult to represent everything on the pricing page.
Yeah, I agree with you. And for the listeners, you should also not be comparing all subledgers just by looking at the cost, but these modules that you're speaking of, because I mean, the theme of the conversation today is that subledgers now have, they're required to do more than just the typical accounting features. So maybe I want to ask you what types of customers, because you mainly have two kinds of package, what kinds of companies would choose the pro package versus the enterprise package where you have all these different modules that you can add on?
It's basically a matter of stage, so size of the business and use case. Today, basically, we look at three types of customers. We're looking at large, non-regulated crypto companies. So think about the Uniswap, WorldCoin, Consensus of the world, like all three are customers. We're looking at governments. We have contracts in Europe. We have contracts, as you said, in government of El Salvador. And we're looking at like companies building regulated products. And usually the non-regulated startups will go more for like the pro package, in a sense that there's some features that they will need less, like the reconciliation feature, for instance, which is really something that is more for like regulated players that needs to reconcile internal systems with on-chain data and all of that stuff. So the non-regulated crypto native startups will fall slightly more on the pro side, and the governments and the regulated companies that needs a wider range of data ingestion capability, data reconciliation capabilities, and also reporting capabilities, because it's not just about accounting, it's about compliance, about sending reports to the regulators, etc., will go more on the enterprise side of things.
Before we continue, let's take a quick commercial break to talk about something that every Web3 accountant, DAO operator, and finance professional can relate to: the chaos of on-chain data. Managing blockchain transactions can feel overwhelming when starting out. Fragmented wallets, scattered protocols, and endless spreadsheets that just don't add up. That's why I'm excited to tell you about our podcast sponsor, Octav. Here's how Octav can change the way you work. Under a single platform, Octav pulls together data from your wallets, custodians, and DeFi protocols, meaning you don't have to jump between tabs or apps. Also, you can instantly generate key metrics like wallet balances, protocol positions, and total funds by category or network. Everything's organized, clear, and ready when you need it. And lastly, if you need to share data with your team or accountant, you can export everything as a PDF or CSV in seconds. The best part? Octav doesn't just show you the numbers, it lets you add context with transaction notes and categories, making reconciliations, audits, and reporting a breeze. This isn't just about saving time, it's about taking control of your data so you can focus on what really matters, growing your Web3 organization. But hey, don't take my word for it, try it out for yourself. Head over to octav.fi/theaccountantquits and get 14 days for free with all their pro account features and discover how Octav can transform your crypto operations today. Cool. So last year, like I mentioned earlier, you announced Cryptio Bedrock, this third generation platform of crypto. It has a regulatory stack component to it. It helps companies to comply with regional regulations like MiCA in the EU, VARA in the UAE, and more. Could you walk us through a little bit more on what is exactly Cryptio Bedrock, how it evolved from the previous versions, and provide some of the use cases where we can use some of these new modules now?
Yeah, sure. So Bedrock is the next generation data platform for regulated institutions. It's basically built on top of like three pillars. One is around scale. So what we've realized in the story of the company, and I think also what some other players are realizing, is that we're not we're not only solving like an accounting or a reporting like use case or problem, we're also solving like a data management problem in crypto, and especially for like more regulated institutions like exchanges and so on. These businesses are generating an insane amount of data, and if you want to do the reporting, the accounting, the cost basis tracking, and all of that stuff, there is like an insane amount of compute that needs to go through like these millions of rows so that you can do the computation that you want and you have the output that you want. And so what we've built this year is very unique data management capabilities. It's very like a very tech heavy thing. Like it's a back end topic, so to speak. But we've built very unique, large data management capabilities that basically have helped us, realize like amazing breakthrough when it comes to data ingestion and then compute. And this is like a unique. It's obviously visible to the customer because everything is very fast, but it's a unique it's a pillar that is absolutely essential to be able to serve like these large regulated institution. The second one is reconciliation. I've talked already a bit about this, but it's reconciliation and actually data ingestion. We entering this world where like it's not all the data that you need to do reporting is on chain or on exchanges. You need to mix this with internal system data, analytics data. So you need to connect to like the Snowflake instance of your customer that is tracking like, I don't know, P&L if it's like a fund, or that is tracking like customer balances of users if it's an exchange. You need to pull that information in an automated and controlled way. And you need to have reconciliation workflow with other data sources, could be exchanges, it could be on-chain data, and you need to do that well, control the way again, and you need to do that at scale. So that's a unique sort of new primitive that we've introduced with these Cryptio Bedrock. There's a lot of flexibility on how you can implement this reconciliation workflow. You can do balance level, you can do transaction level, you can do even like token supply reconciliation for asset issuers. There's a bunch of different things that you can do. And the third pillar is all the compliance reporting. So it's bringing all these capabilities so that companies that now starts to have to report to MiCA regulator or VARA or ADGM or whoever can have the reports that they need and the capabilities that they need to meet these reporting requirements. So this is basically what it is in a nutshell. So it's really, to circle back with what I said earlier, it's really the evolution of our platform from being a subledger that tracks data on chain, process that data, push a journal entry to zero, to like a more wider data platform that can do way more complex things on the ingestion side and on the processing side and on the output side.
Now, you also have a fair market value module, I noted,
Yep.
and under US GAAP, so I'm now referring to ASU 23.8, published in December 2023. Companies holding crypto must, as of December 15th, 2024, report those at fair value, which marks a shift from the previous costless impairment model. If my memory is not failing me, we had Mackenzie Patel from Hash Basis on episode 55 if you want to learn more about that topic. But basically, this new standard is not all encompassing for all types of crypto assets. The ones that are not there are wrap tokens and NFTs. But basically, there's a number of disclosure requirements that you need to file in your annual financial statements, including a roll forward schedule, the cost basis method you use, or the significant crypto holdings that you have, and there's a bunch others. So to prepare companies for this transition, Crypto has built this new fair market value module. Could you share with the listeners how this module works and whether Crypto can generate this roll forward report and all the other US GAAP disclosure requirements?
Sure. So yes, indeed, I think we've been on the first to release like this fair market value module. We have an accounting strategy team in the US with Jeff Rumlett that and other people that are working closely with, they've been working closely with the FASB and the Big Four that we're working with, and the accounting firms that you're working with. You mentioned McKinsey, you work closely with her. And to basically design this fair market value module. So how it works is fairly straightforward. Like how we built it and also how we build product in general. We're trying to be the most flexible as possible. So give a lot of options to the users on how they can use and implement something so that it could adapt it to their use case, potentially to their jurisdiction. And here what it means in the context of the FMV module is that you have the possibility to select the assets. So it's not like one methodology fits all. You can select all of the assets that you have on your workspace, and you can assign different reevaluation methodology to these assets. So it could be impairment, it could be FMV, it could be nothing. So you can really be very granular. And so you can also navigate this like gray area around like these tokens where you don't really know if they are like you need to do fair market value or not. And so we can help you also make a decision, but we won't make a decision for you, but you can adapt and be flexible here. Something also that you can do is so before having this fair market value module, we had another where we had like an impairment module that allowed company to run impairments. And so a lot of our customers have been using this impairment module for quite a while. And in this new fair market value revaluation feature, we've also introduced like a transition sort of feature to help people fully basically automates the transition. And so you can pick like a transition date, pick the different assets that you want to transition from impairment to fair market value, and then like all the entries in the adjustment will be generated automatically.
Now, I know that a lot of subledgers use pricing aggregators like CoinMarketCap, CoinGecko, CryptoCompare. But let's say the company they would want to use, maybe they have a specific exchange that they would want to use as their principal market. Let's say it's Coinbase that they'd like to use as their principal market for pricing all their crypto assets in crypto. Is that a tweakable feature that I could instead link it to Coinbase pricing through an API?
Yeah, absolutely, and it's good follow-up question because it's tied to this fair market value module as well. At the same time, when we started to design this fair market value feature, we did like a long sort of like study work, I would say, with KPMG on this like principal market topic to understand what is possible, like what is basically the level of flexibility that you want to give your customer so that they can do whatever they want, but still be compliant, basically. And after that, this is where we've introduced like more flexibility on the prices that you can pick. So today on crypto, you have multiple options. You can use aggregators like CoinMarketCap, and you can also pick directly exchanges. And so all these exchange data comes from our partnership that we have with Kaiko, which is a company that we are very, very, very close with, that we know very, very well. And so together we've built these they are like they're experts in like market prices, basically. This is what they do. And so we've built with them this like flexible module where you can select also with high level of granularity per asset the specific exchange that you want to use to price these assets. And you can have at the end also a hybrid setup where you want to say, okay, I have 10 assets or 20 assets on my balance sheet. I want to use Coinbase for the three more material, the ones that represent like 90% of my balance sheet. I want to use Coinbase for this. And then for the other long tail of assets, I want to use CoinMarketCap or CoinGecko. And so this is something that you can do in the system today.
Very cool. Thanks for sharing. And probably would be a good idea for me to have Kaiko in the future on this podcast as well to discuss this topic
Absolutely.
in more detail. Now, we've covered the challenge of aggregating data from blockchains multiple times on this podcast. And of course, having complete and accurate data is the end goal for crypto accountants. I did a previous episode with a company called Novus. We explored the topic of managing data in a multi blockchain world and the proliferation of new chains. So, Cryptio supports more than 60 chains. That's what I saw on your website. I want to ask you, how is Cryptio's tech designed to support a new chain on the market? Let's take VARA chain, an L1 which has gained quite a lot of traction since launch. So, it's quite often, right, in Web3 that you have a new chain that comes. So, yeah, how's the
Yeah.
tech designed to quickly support that new chain?
So it's basically like a development, it's a process thing, right? Like so we have a team, like a blockchain data team that has been indexing chains for the last 6 years. They've built like a very, very, very unique expertise on how they do this. They've built a lot of like tooling to help them index chain like very quickly. Sometimes when it's a completely what so today if it's like a new EVM chain, for instance, we'll index it like right away. It's like very simple. When it's a completely new chain with like a completely new like consensus mechanisms and a completely new setup, it will require a little bit more of like investigation. But this investigation is we can't go. I think that our team is like really one of when it comes to data indexing, especially for like reporting use cases, kind of the most knowledgeable team that exists. And so yeah, with that expertise that they build and the tooling that they have, we are able to index new chains like very, very quickly.
Now, one of the other topics I want to discuss is your audit module. So, or rather, your readiness module. So, one of the high risk areas for auditors reviewing companies with crypto is ensuring completeness and accuracy of on chain transactions. And crypto is SOC 1 and SOC 2, Type 1 and Type 2 compliant. On episode 71 with David Bird from EY, we actually discuss how when a subledger has these SOC reports, how basically that impacts the external auditor's scope of work and pricing. So that's another factor for you guys to look into. You should not just look at pricing. You should also see whether that subledger has all these reports, because basically that will have an impact on the auditor's invoice at the end of the year. Now, I want to ask you, could you walk us through this audit readiness module? What is it exactly, and how does its use basically change the scope and workload of an external auditor?
Yeah, great question. So I think before I just talk about the module itself, I just want to say a word on these like SOC reports, and then it would be a good segue to the audit readiness module. But what I was saying earlier around company culture and this idea that we want to do things right and well, and we don't take shortcuts, I think this is a good example. When it comes to SOC reports, you have two options basically. You have the easy options. You can go to whoever out there and any auditor, and you can say, hey, I want a SOC report, and they will issue a SOC report. And then 99% of SOC reports out there, and nearly 100% of SOC reports of like companies doing kind of operating kind of the same space as we are the same. And funny enough, sometimes they're even the same as like another software company that has nothing to do with back office or crypto, because they're just like audit firms that are just like, they're just auditing these reports and just pay them 20K and they will issue the report. And then you're answering one problem, which is the buyer will always, especially like the more enterprisey type of customers, they will always ask for the SOC report. And so you will answer the problem of not being dumb and say, hey, I don't know what a SOC report is, or I don't have a SOC report, so you'll send a SOC report. And then you could be lucky. You could be lucky because a lot of these people are asking SOC reports. They're asking SOC reports because the auditor is asking them to get SOC reports. And actually, no one never reads that SOC reports. And so you can get through it that way. But the people that are not reading it are basically like the smaller guys. And so if you want to get to the bigger guys, you actually have people that will read that thing. And this is where actually you can make the difference. And so when we started building this company, we've started onboarding companies that went through their first financial statement audits, and really including like the very, very first financial statement audits in like crypto history, like years ago. And at that time, we realized, okay, like it's the first problem that we wanted to solve is you have data on a wallet, you have a wallet, and so we need to move data from the blockchain to zero. But then very quickly we realized when these companies went through the first audits that there's actually a bigger problem, a more complex problem to solve, which is doing this, like moving that data from the blockchain to zero, but in a transparent way, in a way that everyone understands, and in a way that at the end, you as the operator, as the the person who actually closed the book, you're very confident that things are done well. And then it's not like a black box. And when the auditor comes, he can look at the different controls that you used to make sure that this thing work well. And so what we've been doing for years is working with people like David, for instance, the David Bird from EY, and a bunch of others from Big Four, but also from smaller firms, because you have smaller audit firms that are not Big Four that are actually more active and so a bit more knowledgeable. If I'm knowledgeable, I don't know, but at least they have, like real life audits, they do more of them. And so it's working with them and doing really the work that doesn't pay off. It's like me spending like hours and hours and hours, like spending time with them, trying to understand how they work, how they think. And this doesn't bring any business in the short term, but it kind of brings this lot of expertise on how you should do this. And it also then it enables us to do two things. It enables us to build like a front-facing, customer-facing internal control management tool within the system. What it means is you have a set of controls and tools that the user can leverage and implement part of their reconciliation process. So there is, for instance, like a balance reconciliation testing tool. There is like a pricing tool. There's a bunch of things that you can implement so that like the whole process from beginning to end is done with controls. And there is an audit trail of how these tools are being used. That's one thing that we did. And the second thing that we did is design. We actually did that a lot with KPMG, design controls in the SOC reports, in our SOC reports, that are that are very unique to what we do, that are very unique to how we index chains, that are very unique to how we process data, how we compute cost bases, like things that really didn't exist before. We just sat down with these guys and say, okay, like as an auditor that is like completely downstream, if you're reading these things, like what would you want to read? And they didn't know, and so we sat down and like we thought about it and we designed these controls, and now they have these, like we have these very unique controls, very specific to what we do in these SOC reports, which really has enabled to like close these like big customers and build that confidence and build that trust with these big players. And also we're not spending 20K. The con side of this is that if we're not spending 20K with like a random auditor, like we spending way more with a big four auditor that is doing the stock report. But at the end of the day, this is what you need. This is like this type of initiatives, and this is what you need if you want to work with the big guys, and if you want to like work with like integrity integrity and be very focused on solving customer problems.
One of the follow-up questions on this, so for the listeners, the auditor, when they're going to receive the client's financial statements, let's say they look at the P&L, they're going to see realized gain or loss, and then they're going to see, okay, so how did you generate this realized gain or loss? The client will say this was realized gain or loss from crypto. They're going to ask, how did you calculate that? They're going to say, oh, the subledger calculate that for me. It's automated. I don't even know. So then they're going to ask, okay, so how did the subledger calculate that? So these SOC reports really, they help the auditor to place reliance on the different controls that the subledger has used to calculate all these different values that essentially lands in your financial statements. Is there another example that you can give, like realized gain or loss is one that basically if your SOC report can give the auditor assurance that, okay, there's a third party that has come, that has signed off on this report, and therefore we don't need to do like, it doesn't increase our scope of work. You have
Yeah.
another kind of example like that?
Yeah, absolutely. Not on the reporting side. Fine, I have plenty on the reporting side, but the one that is very, very important that is part of our stock reports is the data indexing and the controls that you implement to attest completeness and accuracy of the actual on-chain data that is being ingested upstream in the system. So what we have is there's something kind of unique, at least in the early days, to our company, is that talking about like not taking shortcuts. Very in like 6 years ago, basically, when we started to build, our first on-chain connectors, we had the option to use Etherscan or to do it ourselves, and we decided to do it ourselves. And the reason why is it's because at the end, if you want to, like, the problem that we are solving, as I mentioned, is not just like moving data from one place to another place, is doing this with control, transparency, and being able to at the end attest on the accuracy of the process, basically. And so what we have is, so what we basically, all the blockchains that we have on like in our house indexes and everything, and we've built on how we index the chain. We've built with KPMG some very unique controls that we implemented at the indexation level, like indexing level, as well as on the data ingestion level in the system, of basically balance reconciliation controls. And so what we do is that when we index the blockchain and where we're adding a new transaction to like our database, there will be a check where we'll ask an independent node of the balance of the wallet that we are testing, and we'll compare that external node balance with the balance that we have according to our transaction history that we've just indexed. And we will do that control. And it's not just like one thing that we do from time to time. It's like something that is real time, that we do like millions and millions of times per day. In fact, that the system does millions and millions of times per day. And we're also having another control downstream that is more like user facing, where they can do also this type of control. So this is like a unique thing that is being designed with KPMG, added to the SOC report, and that can attest this. Because at the end of the day, if you don't have this, and maybe I'm sure you've done this, you will start as the auditor or the guy like checking the work. What you're going to do, you're going to open Etherscan and you're going to do this reconciliation yourself. And imagine you have hundreds of wallets, like it's impossible. And Etherscan is not a source of truth because Etherscan doesn't have a SOC report. So like, okay, so then where do you go? What do you do, right?
Yeah, and these are stuff that the user sometimes they won't actually see, but all those are all checks and balances going in the background. We diverted from the question I was asking you about the audit readiness module of
Yeah.
Cryptio.
So the audit readiness module basically is built. It's these like customer facing internal controls system that we have on Crypto. And so you have a few. You have the balance reconciliation that I mentioned. So the user is able to run tests around data completeness and do these balance reconciliation and log the test for approval if there's like different people that are in charge of like the reconciliation and the closing process, and also for review for auditors. You can do the balance reconciliation. You can do pricing checks around principal market. You can select some specific transaction and verify that your valuation policy is actually respected. That when you're saying they're using coin market cap for Bitcoin, you can take a Bitcoin transaction randomly and verify that we're using a coin market cap price. You have a lot of controls around cost basis as well. So you mentioned that it's difficult to test also the cost basis. There's some like sort of lot testing tools as well as verification that the cost basis is like running properly. So you have also like checks like this, which same you can do. There's a tool that you can use to do the testing, and then you can log the thing. And then one of the other one that is nice is the cross wallet control. So what we've seen is a lot of the finance team, they live unfortunately sometimes a bit far from like the product team, and they realize a little bit too late that, oh, actually we just released a new contract on this new chain and we didn't know. And they realize this like 3 months later when the product guy is actually sending them the address, or actually telling them, hey, actually we're live on VARA chain. And so what we have is a control that basically analyze the wallets that you have imported in the system, analyze them in sort of real time, and see if these similar addresses are live on other protocols, and send you some alerts when we're seeing that something, that a wallet that you're tracking that is active on Ethereum is also active on Arbitrum, for instance. And so same thing, there's a internal control here. So you come, you check before you do the closing, and you can log also do the testing, log it, put in the audit trail. And that's and maybe I think I'm missing a few, but it's a lot of these different controls. We're not necessarily advising our customers to use all of them, but the way we like to think about it is in terms of risk, right? So based on your business, what are the most risky areas? So what are the things that can go wrong first? And let's just implement this control or that control to kind of mitigate that risk. And for instance, if you are like a DeFi company that is like collecting fees on smart contracts, this idea of having like new contracts that could be released by your team on new protocols is really like a very big risk. Like it happens all the time. So we will recommend to use that tool part of the closing process, and maybe less, I don't know, like the pricing one or something like that.
Before we continue, let's take a quick commercial break from our sponsor. If you're serious about running your business using crypto, you need tools built for crypto. One of my favorite apps, and yes, one that I use multiple times a month, is Request Finance. This app has been a game changer in how I invoice my clients and receive stable coins and crypto directly in my wallet. But hey, there's so much more to it. Request Finance is the all-in-one platform for crypto operations. Accounts payable, accounts receivable, expenses, and even accounting. Plus, they've got a killer multi-pay off-ramp to over 190 countries, meaning you can pay someone with crypto and they get fiat in their bank account. Request Finance connects to over 20 blockchain networks, including Ethereum, Solana, Base, Arbitrum, Near, and more. Here are some features that I love. Batch payments using your preferred wallet of choice, a single dashboard to track all invoices with real-time updates. All invoices contain the transaction hash for easy audits. But hey, don't take my word for it. Try it out for yourself. Head over to requestfinance/partners/theaccountantquits and get 2 months for free with all the pro account features. Join 3,000 finance leaders today using Request Finance and make crypto operations simpler, compliant, and less stressful. Yeah, hearing you, I mean, it's such a complex task building a subledger. And sometimes when I hear people complaining about the pricing, I'm like, yeah, but this product is completely different to like the traditional accounting softwares that you have. And you're not only doing this for one chain, you have to replicate this for all the different chains that you support. So maybe that's a good segue to the next topic I want to cover, is that there are a lot of subledgers on the market today. I mean, there are a few offering also invoicing and payment capabilities.
Yeah.
There are subledgers that want to offer the main ledger features. Basically, you don't have to export that data then into a Zero, into a QuickBooks. You can have your chart of accounts inside the subledger and prepare your financials. What's your perspective on this? Do you think subledgers should aim to be this all-in-one solution?
So yeah, I have this pretty strong opinion in this. Like so first of all, I don't think that the world will fully come on chain tomorrow and maybe ever. What does that mean? It means that we will live for a very long time, if not forever, in a hybrid world, basically. And in that perspective, at Cryptio, like we believe that we're not here to reinvent the existing accounting stack infrastructure. So you have all these general ledger tools. They're doing a lot of great things. Accountants and finance team know how to use these tools, and we will never compete with these guys, and we'll never try to reinvent what these guys are doing. Because if we were, like, I understand that in some capacity for some types of use cases like DAOs and small companies, it's a bit handy to have everything in the same platform. But essentially, at the end of the day, you're just marginally improving the existing financial operation workflow. You also kind of can bring costs down because you don't have to have like a zero subscription and so on. But you're living in a world that is like very early stage. In fact, this is a world that is very, very, very early stage. And when to come back to the pricing conversation, the main thing that actually at the end matter is price. So it's not our area of focus. Like my view and our vision of things is we are building the financial integrity layer of crypto. And what it means is that we're building data solutions that are unique to crypto, that are solving problems and challenges that are unique to a team that is like operating a business in crypto, whatever this type of business is. If it's like it could be Uniswap, it could be an exchange, it could be a trading firm. Anyway, the fact that these companies have like run crypto operation comes with like very unique challenges when it comes to data ingestion, reconciliation, valuation, reporting, compliance, all of that stuff. And this is what we're here to do. We're here to solve these complex problems so that we can bring that level of integrity to these people. And therefore, it's not like a marginal optimization of workflow. It's kind of like a 0 to 1 on things that they can't do today, that is having a big impact on their business, that is preventing them sometimes to operate in a compliant way, that is sometimes completely preventing them to scale and to hire. And so this is like the world that we operate in and that we're focusing on, is building this financial integrity layer of crypto, solving these very complex data challenges that are unique to crypto. And this goes from back office to middle office, from accounting to risk management, and looking at these these things that are very, very unique to crypto. And maybe I'll finish with this. What allows us to do this is like these problems are not obvious. The problem of I need to push data from my like the Ethereum blockchain to zero is kind of an obvious problem. It used to be maybe not that obvious, but now it's an obvious problem. Everyone can relate to this. But it's once you're deep in the trenches with the biggest players, the one that really at the forefront, like the ones that don't have any choice of just like figuring in this problem out by themselves. This is where you're working with like the circle of the world and the Uniswap of the world, or the governments, exchanges like Gemini and so on, that you kind of have this exposure on these very, very unique, very sticky, very complex data problems. And you're also kind of realizing that all of these problems are based on the same set of issues and challenges, which is how to get data from the blockchain, as we said, in a complete and accurate way, how to have like a scalable data management platform that can operate complex reconciliation, and how can build a very modular like reporting capabilities on top. And so this is what we're building, and this is the vision for the company and the product.
And For the listeners, if they'd want to know some of the upcoming features and milestones, I know you usually you have a big announcement at the Crypto Finance Forum. We are a few months away from that. So maybe some of the smaller upcoming milestones that you have until the conference.
So one of the very big feature that we're releasing that we are very excited about, maybe it sounds not that exciting, but the people who understand that problem would be excited about it. It's what we call the multi-inventory feature, which is basically a way to build virtual inventories, and so to segregate different assets that are part of the same wallets and the same inventory, two different inventories. I give you a concrete example and you understand better. If you're a custodian, if you're an exchange, um, a lot of the time you commingle your assets with the assets of your customer. This is a very big problem. And in the kind of the normal non-crypto world, it can't happen, right? But in the crypto world, it can happen because of how blockchains are made, because of how you need to pay fees, et cetera, et cetera. And so you have a lot of like this commingle problem. And so it's multi-inventory feature. One of the use case is to be able to segregate customer assets from client assets and run these different inventories in parallel with different cost basis methodology, including very advanced ones like being able to do like spec ID and one-to-one matching and that type of thing. So these already exist, but this multi-inventory feature is actually a very, very, very important primitive that is very needed in this like regulated enterprise world.
What does that mean? Let's say I'm using Gemini as a crypto exchange. So when they're using crypto, if I have funds there, they would be able to, in crypto, see this is Umar's account, line by line for each client. Is that what you mean?
So the idea is that if you're looking at if I am an exchange, so if I am Gemini and I'm tracking, let's say I'm doing custody on whatever custodian, like copper, for instance, I'm doing custody on copper, and I have all my client assets on copper. It could be on omnibus accounts. It could be where you have one wallet that makes all the customer assets. It could be segregated, whatever. And on top of this, within these wallets, I also have my corporate assets. Where does these corporate assets come from? It comes from various places. One is the fees that you need to pay to move funds from one wallet to the other. And these fees are not paid by the customer, they're paid by you. So you will send from your treasury wallets, you will send assets, and these assets will cover the fees. That's one use case. And the second use case is when your customers are trading on the Gemini platform, you're making money, right? Like there's a revenue, like you're getting trading fees. And these trading fees are kind of virtual in a sense that you have your internal system where you're recording all the trades of your customer, and you know that when you're trading this and this, I have this asset, this asset, this asset as a fee. And so your pool, your inventory of customer assets as these customers are trading would be like gradually split between, like part of it will become actually your money because it's the assets it's the fees that you're getting through all these trades. And so you're facing a problem as Gemini or as whoever company, is that you would want for accounting and cost basis purposes, but also for balance tracking purposes, which is more on the compliance side, you will want to segregate the two. So you will want to have a view, an inventory, where I can see only my assets, my corporate assets, the one that I'm collecting from my customers, so to speak, as they're trading on my platform. And I want to put also the assets that belongs to me, because these are the assets that I send to fund all the gas fees. And these should live in their own inventory, and they should run their own cost basis. And customer assets should never be involved in the computation here. And same thing, I want to do the same thing with the customer assets and potentially run cost basis, even though it's not necessarily always needed. And so I want to also have a very easy way to say at any point in time, okay, according to the system, how much customer asset do I have, and does that tie with my liability basically? So that enables also to do that type of thing.
Yeah, wow. I guess, yeah, exchanges, market makers, those are the complex use cases.
Exactly.
I'm looking at the time. There are two last topics that I wanted to cover with you, Antoine. The first one is so the gaps in crypto accounting education. As you know, at the Accountant Quits, we launched this Crypto Accounting Academy to help to close the gap, basically.
Yeah.
We also have a practical class, how people can use subledgers. So it's a topic I'm obviously passionate about. I'd love to hear your perspective on where are some of the big gaps in crypto accounting education that new teams onboarding to crypto consistently struggle with.
Yeah. I think that there are definitely some gaps. They are like not that much on the core accounting side. I think that the gaps is because the accounting side you can teach it, and like a good accountant that is not a good crypto accountant will obviously will understand like the different issues and challenges that comes with like crypto accounting, especially when it comes to the topic that we discussed around like the valuation and all that stuff. So I don't think there's that much of a gap here, but there is definitely a gap on the use case. So the thing that I just described, for instance, like this like multi-inventory thing, and they need to segregate these inventories. This is where like the gap is to like to really understand all the different edge cases, to understand the controls that you need to put in place so that you can at the end of the day do the output is what you want. Like all the complexities around the use case, and therefore like the data management and the way you should think about it, that I feel is really where the gap is, you know. And then obviously there are some complexities even more upstream on reading blockchain and reading Explorer and that type of thing. But it's true if you are operating or doing accounting or reporting for like a DeFi company or a DeFi fund, obviously the biggest gap that you will face is understanding that world, like understanding what the liquidity pool token is, and understanding how to display the data and why the thing is different in Uniswap and it is in 1inch. Like this is where the complexity is. But when it comes to more like regulated use cases, like these exchanges, the stablecoin issuers, and so on, it's a bit more vanilla on the blockchain data side. But on the core use case and accounting and reporting side, like how to manage the data, how to reconcile, and clicking, you know, so that it's like the accountant can sit down with the customer and understand this right away. This what takes a lot of time. And so what we have is we have different teams in the company. We kind of splitting the problem into. We had some teams that are, we call them accounting solution consultants. So they are like accounting professionals, and they're very very good on the accounting side. They're actually good on every topic, but they're very strong on the accounting side of things. And we have other people that we call enterprise solution consultant, which are very very deep on the use case side. And here, like finding these guys and onboarding these guys is quite a challenge.
Yeah, I agree with what you said. And for the listeners, so because like Antoine mentioned, every business has different use cases, different business models. That's why I think if you want to learn crypto accounting, if you're at an early stage in your career, joining like a crypto accounting firm would be great because you'd be actually working on very different use cases each time before you actually maybe want to go into the industry and work on that career path to maybe one day becoming like a CFO or something. Now, there's a last question I wanted to ask you, not related to crypto, but more about how you take time off and how do you continuously learn. So, as an accountant myself, I really think subledgers are the most exciting product for crypto mainstream adoption. But this environment is so fast paced. And I want to ask you, what learning habits have you developed along the way to make sure you're always kind of updating your knowledge? Do you have like a circle of other CEOs, other entrepreneurs you regularly connect with? Are there specific resources that, as a founder and CEO, has impacted your growth?
Yeah, absolutely. So, you know, yeah, I do the like the normal stuff, I would say, that kind of well, everyone does, what everyone should do, which is listening to podcasts. It's something that I do quite a lot, and I do it some of them on crypto, but most of them actually on company building. Because as I mentioned, like I think the reason why we are like where we are is mostly due to the right things that we did on who we hired and how we structured the company and so on. And so there's more success that comes from that side of things and doing this right than having an amazing vision on where crypto will go and making like big bets. Obviously, this is part of it, and we are passionate about crypto, and I think that we are very, very deep expert, especially when it comes to the regulated side of things and the data side of things. But yeah, like podcasts are definitely my go-to thing. And then we have kind of the chance to operate in like different countries, and so I kind of live between three cities basically: Paris, where I'm originally from, London, where I live, and New York, where I spend a lot of my time. And so I have in these three cities, I have also like group of friends and like fellow CEOs and founders that I'm very, very close with. Could be in crypto, or it could be not in crypto. And spending time with these guys was also kind of like a way to learn about others, to understand, to see problems before they come, and also a little bit sometimes it's a way to like to confess and tell stories that otherwise like not a lot of people will understand.
Are you sometimes surprised by how successful you've been over? I mean, 2021 is not a long time ago. Think about what you were doing like in 2020. Are you sometimes surprised? And you're a first-time founder. You don't have a co-founder, and a lot of these startups have co-founders. How have
Yeah,
you navigated also without a co-founder? And that will be the last question.
sure. So I don't have a co-founder, but I have like incredible people that are across the company, but especially in our leadership team. Very early on, there are like actually a couple of people that joined the team around 2020, 2021, like our CTO Luca, our CRO Emont, that had like a very transformative impact on the company, and without them, like the company would not be where it is today. And then with the people who join after that and the other people that we have in our leadership team, we have an amazing leadership team with incredible people. And yeah, without them, I would be nowhere. So like I'm very, very grateful to have them. I think that the solo founder thing, I think it's good. It's good because it's especially when you are like in the very, very, very early markets like this, when you require a lot of like conviction on things. Like it requires just it's easier to just go, 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 and don't so you don't have this like constant debate with your co-founders. Should we do this? Or should we do that? Because it's when the market is, especially in like 2020, 2019, the market was so early. Like you had all the reasons of the world to not do what we're doing. And actually at the very early days in the company, there's a guy I was working with, like a guy that was kind of owning tech, and he left after a few months because of this, because he was kind of always debating on like, should we do this, should we do that, do you think crypto would work? Like, it's like, fuck that, like we're not here to ask these questions, like let's go and see what happens. And so the solo founder enables to go fast and don't spend too much time having like unnecessary conversation. But then the team, and especially the people that I mentioned, it's like without them would be nowhere. And so yeah, am I surprised? Yeah, I'm surprised and grateful, but I'm also conscious that this is just the beginning. So
Yeah, thanks for sharing. And people listening, if you want to work for Cryptio, which is a great company, they have 14 open positions. I'm currently seeing this on the websites. And I mean, these are like all the roles, but the non-technical roles, you also have like quite a few roles there. So do check it out. Antoine, thanks a lot for coming today. Has there been anything, we've spoken for a little bit more than 1 hour, but has there been anything that we didn't touch on that you'd like to mention to our listeners?
no, I think that we covered a lot. Indeed, if you want to work with us, feel free to ping me or anyone in the team anytime. If you don't see on the website a job that like kind of clicks with you, might have others. So like it's maybe also worth pinging us. And yeah, I think that we talked about it. It was a pleasure to be back on the show. And looking forward to come back maybe in a few years.
Yeah, definitely. Usually I like to end the podcast by asking the guests about their favorite quote or maxim. The first time you were here, you shared that you shared a maxim that resonates within the company, which is having a curiosity mindset. So that's like a mindset that you try to preach or
Yep.
implement to everyone. I'm not sure if I have to ask you for a second one today. If you have one that's floating around in your head, please do. Otherwise, I'll ask you if you could share how could people reach out to you and where should they go to learn about crypto?
Yeah. Do we have a new maxim? I don't know. Um, well, we have this kind of, it's not like a maxim, but it's part of the culture and the value thing that we have internally. But when you're doing something, like it's worth like doing it well, basically. So as I mentioned, we have this culture around like autonomy, and we're expecting people to execute and to execute well and be transparent when they have limitations. And so we ask people that when it's you're doing something, it's worth doing it well. Yeah, they can reach out on LinkedIn, they can reach out on Twitter, and they can reach out to anyone in the team and to me as well.
Perfect. Well, thanks a lot for your time, Antoine, today, and we'll be in touch.
Cheers, Omar. Thank you very much.